mean, that's some stuff I look for. Um, and yeah, so just take a moment to realize that. So like a bullish fair value gap would be something like this. See how this wick does not overlap this wick? So you draw it right here, okay? And as you can see, this was very well respected right here. We bounced right out of it. And a lot of people have asked me, what if there's two fair value gaps like this? So if there's two fair value gaps like this, well, I've been trading long enough to know, so I've been trading like probably 2 years now. So in my head, I can, even though I'm on the 3 minute time frame, I can see the 5 minute time frame right now in my head. Like I can picture this in my head. So I know if I go to like a 5 minute time frame, this is going to be one big candle, and I kind of see that. So this is at 10 o'clock on September 9th. So if I go to the 5 minute, um, 10 o'clock on September 9th is right here. So it's still two candles. So let me just go on the 15 minute real quick. 10 o'clock, which is right here. So on, okay, I don't think this, oh, it's right here. It's right here. So see how the candle we bounce off of went into one, and you can see it actually later bounces. So this is what a fair value gap is. They're pretty easy to find. If you guys, you're probably gonna want to go practice finding them, in my opinion, after this class. And what a lot of people think, there's some people who have watched ICT's videos and they learn what a fair value gap is. A lot of people who don't go more in the depth and learn what a fair value gap is, they think price is gonna bounce out of these fair value gaps and go wherever they want it to out of every single fair value gap. But that's not how it works. In order to take a trade out of a fair value gap, there should be other parameters. Okay, so I'm going to teach you guys the other parameters that you guys should take out of a fair value gap. So then you'll understand what fair value gaps to take and what fair value gaps you shouldn't take, okay? So I got to open my Discord real quick. Kind of bugging me out real quick. So the first thing you want to do to take a fair value gap is you want to make sure there's like a break of structure. So if you guys don't know, learning market structure is very, very important, okay? So market structure is, hopefully you guys, most of you know what it is, but market structure is learning like where we form highs and lows. So when I first started trading, market structure was the first thing I learned. And I'm going to be honest, I was more profitable of a trader when I knew market structure in the beginning than like 6 months later. I started seeing all these people use indicators. So I put all these indicators and I actually got away from market structure for a while. And I just tried using all these indicators. I did not pay attention to highs and lows at all whatsoever, and I kind of just relied on indicators, and I never even paid attention to market structure ever, and I actually lost more money not paying attention to market structure than when I actually first started trading and I mainly watched market structure. So basically, as a trader, I went from the beginning from basically using no indicators and watching market structure. I think I had a couple like moving averages in my chart, but that was it. And I actually went as a trader from that to using a ton of indicators, not getting away from market structure, and now I'm back to just watching market structure, and I'm using concepts taught by ICT. Um, so that's kind of interesting. So market structure is very important. A lot of people tend to get away from it when they start trying to learn indicators. Okay, so it's very, very important to learn market structure. So as you guys can see from now, if we're just on the 15 minute, we have like a higher or a low right here, okay? And look, this seems to be a lower low than this, and this, okay? And then like this is just basic stuff. And then we get a higher low right here, a higher low right here. Notice how these are very, very obvious. See how obvious these are compared to a higher low like this? This isn't as quite as obvious, and it's not much of a retracement. So see, like noticing the obvious ones is very important in when you're learning ICT, okay? So you just want to look for like obvious ones, because what I'm about to tell you next is the model I look for. So on my Twitter, I actually posted a few models, and I'm just going to show you the basic ICT model I look for every day setup. So I always look for a swing low to form, okay? Something like this. And then I look for a break of that swing low, and then a retracement up somewhere. And then this is where I enter, and then down, okay? So when learning market structure, this is the most important, like this is one of the most important concepts, but I'm going to teach you in ICT terms, okay? So what you want is you want to break above a major point of liquidity. And I hope you guys have all learned support and resistance, because support and resistance is liquidity. So what I look for is a break above liquidity. So pretend this black line is liquidity, okay? A break above it, and then back below it, we break structure and then go above it, okay? And remember, remember what fair value gap is? Your entry should be in a fair value gap in this point right here. So I like to see when a fair value gap is formed in a break of structure. And I'm going to show you a live example right now. It was actually from Friday, and I was expecting this play out. And when you look at that, so the live play, the live fair value gap just hit my target. This is my target. So that just played out perfectly, and I literally just posted that in a Twitter group chat. If I can find that real quick. So I literally just posted it in a Twitter group chat like 5 minutes ago. Let me get to it real quick. So before this class even started, I posted this. This is the only. It's not like I make 50 million screenshots and just post whatever and it's right. This is my first time looking the market today. I literally just made this. This was it. So as you guys can literally just played out. That was a perfect setup, but it's not a kill zone, so I don't really take trades during kill zones. But I mean, stuff like this is why my win rate is so high, is because I wait for this exact model I literally just showed you, and the fact that it's playing out live during this class and that I just did it live during the class is absolutely, I mean, perfect timing, great timing. So, anyways, this is an example of the model I just showed you, but I would like to see, but I'm going to show you a little more perfect example. So a lot of you guys have probably learned double tops and double bottoms. Disregard everything you've learned about double tops and double bottoms. I'm just going to update the group chat with what I posted. So disregard everything you learned about double tops and double bottoms. A lot of people say take double tops and double bottoms, and like, so if there's a double bottom, you take calls on a double bottom. But no, ICT teaches double bottoms and double tops are actually a point of liquidity, and that's kind of the liquidity I look for to be taken, like as that sell model I showed you. I don't know if it's on the screen anymore. I think I deleted it. But the model I just showed you, the this model right here, a lot of times I look for this. I look for the like equal highs and equal lows is what he tells them. So equal highs is a double top. So so if we have something like this is kind of messy. So see how we create this double top right here? This is kind of the liquidity I look for. So I like to use double tops and double bottoms to look for these models. So I like to see a break above a double top, and then that's when I look for the market structure shift and then retrace into the fair value gap. So I mean, that's kind of like what I'd like to see. Some people use single swing highs as liquidity. They can tell, but I think equal highs and equal lows work better. And when I say equal highs and equal lows, I mean double tops and double bottoms. Okay, so kind of remember that. So I'm gonna show you the live model that actually played out Friday before close. So all week, I was targeting 4,072, and a lot of retail traders in my timeline just say, "Oh, we're coming up to this giant supply zone." And they draw this giant zone right there. They're like, "Oh, we're gonna reject." But I do not. I got away from supply and demand. I really started looking for more liquidity. I think liquidity is more important in this market. Um, so all week I actually had these equal highs drawn on my chart, and I was looking for this liquidity level to be broken. And look, what does this look like? It looks like a double top, but no, it's liquidity. And there's some other parameters that, which is why I thought we were going above here in the first place. There's equal highs, and then there's another thing I haven't taught you, which is this. So if you draw a fib from the swing high, reset swing high to reset swing low, um, I only have a 50% fib on my thing, and basically what this means is if you're looking to take a short, okay, every time you look to take a short, you're gonna look to short in premium, okay. So if you draw a fib from the most recent swing high to recent swing low, this is gonna be premium for shorts, okay. This is where most algos are gonna short, and this is gonna be where you're going on short. When I started off trading, I never looked for this, and when I started drawing these 50% levels, um, when I started drawing these 50% levels, um, these helped me tremendously. Even if you don't want to learn ICT, and you want to keep with moving averages, whatever you use, I strongly recommend having a 50% 50% level on your like drawing, and do not short if you're not a premium, okay? And if you're going to long, you want a long at discount. So under the 50% would be discount, okay? Um, so long at discount, short and premium. What you should do is, if any of you journal your trades, go backtest your trades and try to see if you took your trades